If you've been trading for a while, then you must have encountered this, when there are multiple zones to either buy or sell from. And this makes trading and traders get confused because they are unsure of which zones to use for their trade. And when you are confused and you don't know the zone, there is a high probability you either miss trades or take back-to-back losses while trying to buy from every zone. But that won't be the case if you watch this video to the end, because in this video today I'll be giving you my knowledge about inducement. When market is on a clear trend, for this example a downtrend, we always see multiple zones appear in the market, multiple zones like this to trade from, and that's where inducement kicks in. As you can see here, we have two zones to sell from. This is going to be my inducement zone. This red box, for this example, this is going to be my inducement zone, and this is going to be my correct zone. Now, what is inducement? Inducement, in a common word, is just a trap. It's just a trap to lure people in forex. It's just a trap set by market. These zones are often look like the best zone to trade from, but when you look closely, you see that it's just a crocodile disguised in mud, because most often it doesn't hold. Now, when we have multiple zones like this, inducement zones, always induce traders into thinking that this is the right zone to sell from, and they will be placing the limit orders, hoping for market to decline when it taps into the zone. When they place the limit orders, say they'll place their SL above this place. But what happens when we have this trade, when we have zones like this? What happens most often is market reacts a little bit and doesn't respect the zone. You see, market doesn't respect the zone, it taps into the real zone, then take the real big move. And the reason for this move all comes down to liquidity and imbalance. An imbalance is just an open price range, meaning a zone that market hasn't retested, just like this particular zone right here. You understand? Had it been market did something like this, tap into the zone, then it would make this other zone a valid place to sell from, but that didn't happen. That is not the case here, because we have this unmitigated demand zone and this gap here. There will be some kind of a liquidity sitting around this particular gap. Now, this is how it works. You see this particular box, a lot of traders that are looking to sell from here will place their limit, will place their SL just above here. And not just sellers, a lot of buy stop traders who are looking to get into a buy in this trade. If this particular zone doesn't hold, they will be placing their trade also at this place. You understand? And also we have institutional orders sitting right here. Institutional orders. Now, how do I know that? It's because all these large movements you see, all these big movements, they are not being caused by retail traders. So all these are institutional buyers. Retail traders, with the retail traders, we can move the market just as much as these institutional traders that trade with big amounts does. So now, because of this, the liquidity sitting right here, you understand? Because of the liquidity sitting right here and institutional order sitting right here, what market does is it doesn't respect this zone here. Rather, it just come back, clear all the buy limit orders, clear all the sell limit order, grab all the limits, all the SLs here, just for enough liquidity to move this market. Then after that, it taps into the real move, into the institutional sellers filling all their orders. Then we have our big move. Remember, institutions are the ones that bring the big move into the market. You understand? Before you be like, why not place a limit order here and place a limit order at this other zone, because no matter where it goes, you'll be in the trade. That's a good thought of you, but here is the problem. Sometimes when this zone doesn't hold and this other zone doesn't hold, you will be in two lost in a roll. So comrade, die that idea. It's not worth it.
So right now I'll be taking you to a real chart example, and I'll be showing you how to spot this inducement zone. I'll be teaching you the concept of this inducement zone, how to spot them, and how to use them how to use them to your advantage. And not just that, I'll be teaching you a concept that I call a double confirmation concept. This concept will really help you a lot anytime you get confused in the chart.
I'm going to be using this leg of price action right here for this example. As you can see right here, you have multiple places to buy from. because yeah, the market is making higher highs and higher highs. The only idea is telling us is to buy. So what we are looking for here is only to buy, and we have multiple places to buy from. We have a zone to buy from here, we have this demand zone here to trade from, we have the second one here, and then we have extreme demand zone right here. What I'm going to do right now is just to run you through this trade right now and explain to you in a clearer manner what this inducement zone of a thing is, so you understand and know which zone to pick when you have things like this on your charts. Looking at this trade demand zone, which one do you think markets will be reacting from? Would it be the first one here, the second demand zone, or the third one? Well, let me answer that question. First of all, I will delete this first one. Yeah, the reason is because we have a clear imbalance beneath this place right here, this imbalance right here, that will lead us into this demand zone, the demand zone beneath this place, this demand zone. And for those of you who doesn't understand what imbalance is, this is an imbalance. This gap between this, the candle here and this candle, is what we call imbalance. You understand? And it will lead us into this demand zone. This demand zone right here, you can now know that this particular first demand zone is not going to give us the reaction we want, so we delete that one. Now right now we are left with two demand zones to buy from. Both of them have the same concept. They have imbalance, demand zone, imbalance, and in demand zone. Let me ask you now, which one do you think will be high probability? You must be guessing this one right here, this one right. Here's the point, and the reason why I picked this particular chart, there's something I want to teach you this point now. There's a knowledge I'm going to give you right now. This knowledge will help you when you find yourself in a situation like this, and it help you win more trades. You understand? So pay attention. Let's read this market structure so you do know which zone to pick from and which zone is a high probability. So looking at this chart right here, this market had a low here. We came here, we formed a high. We came here, we made another low, and then when we got here, pay close attention. This market didn't push through this level. Rather, we saw some selling pressures, and this market declined. Understand? Now I'm telling us one thing about this zone. That this zone wasn't strong enough to push us out of this zone and continuing the trend. You understand? Let me just delete this thing and explain it more better. Right here, when market got here, we had an equal high, telling us that this zone wasn't strong enough to pushing us into a new high and continuing the trend. Though you might say we have some internal break of structure, but what we needed was this particular level to be broken, so this trend, this uptrend will be continued. But that didn't happen when we got the zone. Rather, we saw some selling pressure. Market came here, accumulated again before breaking out. So with this concept that I just said right now, you already know which zone is a high probability to trade from, which means this particular zone is not strong enough. This one is high probability. You understand? But what we can actually do with this zone, this particular zone right here, is just to keep it in mind in case if this is our true zone right here, just does something like this, break through this our strong zone like this. This particular zone might still be very, very, very valid if market shift structure from this zone is still very, very valid. If we get a structure like this, shift in the market to the upper side. Of course, this particular structure, this demand zone, also has some break of structure right here. It has some internal break of structure, but the place we want to trade from is the strong zone that broke us through into a new high, which is this one. So right now, let me just first of all delete this one. Just leave it with maybe a trend line like this, so I do know that there's a zone right there. So now our focus right now should be on this particular strong zone. You understand? Right now, I'm just going to run you through this chart right now. I'm just going to play this chart, and listen, this is what I will be expecting. We'll be expecting a market that will break out this particular demand zone here. Because remember, that was the inducement zone. This particular zone is our inducement zone, so I'll be expecting market to push through it, come into this our strong demand zone that broke out and gave us a new high. Another thing I won't be expecting though is market pushing through this particular demand zone into this other demand zone down here. Let me play the trade so you don't understand. Starting to see some reaction from that zone, and yeah, you see market boomed from there. After market tapped into this demand zone, we had that push up and another push up into new highs. You understand? Market cleared this demand zone right here, which is an inducement. It reacted from this and not this other zone here that didn't break us into a new high. Now listen, there's another concept avoiding this inducement that I will teach you right now. This is what I call playing safe. You understand? Because sometimes this demand zone might get wicked out. Like a week will just take you out. So I'm just going to use another example and show you what about double confirmation. Let me just play another example so you do understand. This is going to be another example that I'm going to be using for you guys. Looking at this chart right now, you can see that we are on a clear uptrend. We are on a clear uptrend as market is making new highs and new highs. Now let me just go through this trade fast. I don't want this video to be longer than it is. If you look at this place, we have multiple demand zones to buy from. We have number one here. We have this number one here. We have the number two here. I always make my demand zone at the last candle before the implosive move. We have another one here, and we have the last one here at the extreme. Looking at this chart right now and what I taught you previously, which zone do you think would be a high probability zone that markets will react and give us the reaction we want from? Would it be this number one, the number two, or the number three? This number one, first of all, I will eliminate it, and the reason is the same reason that I said earlier. We still have some kind of imbalance beneath this place here, and this imbalance will also lead us into this demand zone there. It will lead us into this demand zone here. So with this in mind, we already know that this place is not a high probability. Now we are left with these two again. Once again, now I'm going to be asking you this question again. Between these two, which one are you seeing to be a high probability? Reading from the charts, reading from the market structure, which one do you think will be a high probability? Now if you are not paying attention, then you might not be able to answer this question. So let me just answer it. So let's read this market structure. This market had a low here. We came here, we formed a high. We came this place, we formed a low, a high here. So pay attention again. This high wasn't strong enough to push us through this previous high that will lead into trend continuation. So another selling pressure came in here. Market had to accumulate a little bit. Here we got the buying pressure, we broke into this new high. So let me just delete this thing and let's keep explaining. Now the reason why I'm doing this example again, I just want to teach you the concept of double confirmation, so keep paying attention. So you see this particular high didn't push us through a new high, so I'm just going to be trading with the demand zone that pushed us into a new high. Though this demand zone right here has some internal structure, you understand, it broke some internal structure. If you are to read this chart like this market had this concept like this. So we're just making a minor downtrend, which this particular zone broke out. But that's not what we wanted to see. That's not what we want to see, because if you look at this chart right here, we are on an uptrend, and what we want to see is a market that pushed through this particular level here, and continue this bullish trend. You understand? So for that reason, this place is not strong enough. It's not strong as it seemed at first. You understand? I'm just going to eliminate this thing and do what I did last time. Just have it in mind.
So I'm just going to run through this trade, and I'll be expecting this zone here to be taken out because that's the inducement zone. Also, we won't be expecting market to break through this particular zone here. But if you want to play safe, just like I said before, just like I myself do sometimes, because sometimes market might just do something like this, break this zone. If you have a limit order here, market might just break the zone, hit your SL, come back to this extreme demand zone that wasn't strong enough to break us into a new high, and just start reacting from here. So what we're doing at this particular other side is doing what I call a double confirmation. So right now I'm going to teach you the concept of double confirmation. So let me just play this trade through. So when market gets into this place, what I will be doing is I'll go into a lower time frame and look for a pattern that will look like this. It tap into this demand zone, then we change pattern to the upside like this, start seeing new highs being formed like this. You understand? So I'll be doing this in a lower time frame, not in this 4-hour time frame. So when market taps into this zone, we'll go down into a lower time frame and be looking for shifts in structure in the lower time frame. So we start buying. We got our tap right now. I'll just be going down into a lower time frame. So right now I'm at the 1 hour time frame, and what I'm looking for this 1 hour time frame is a shift in structure to the upside, a pattern that would look like this, something like this. You have a low, a high, a low, and then markets break structure to the upper side at this lower time frame. Understand? So this is the structure that I'm looking for, because when we get this break of structure, then I'll be looking to buy from the demand zone that will break that structure to the upside. So what I'm looking for here is a shift in structure to the upside. Understand? So let's just run this trade through right now and see if we get that. Okay, right now we are starting to see a market shifts in structure, and let me explain in a simple way you understand. If you look at this chart right here, we see, let me just start from this point. We see we had a high here, we came here, we made a low, we came here, we made a high, we came here, we made another low. So this market was trending, was in a minor downtrend, on its way to our demand zone, our 4 hour demand zone. So what we're looking for was just a shift in structure. So after we got this high here, we got another low here, and markets made another high here. Here's where it gets interesting, because after we made this high, this particular low didn't came back to break this low to continue this minor downtrend. You understand? Rather, we had a new high. This high now leads us into what I've been expecting, which is a structure shift. So what I'll be expecting right now is to be buying from here. I'll be buying from here. Let me just shift this thing a little bit here, and this particular my demand zone is always the last candle before the implosive move. So my trade will look something like this. We have this imbalance right here. You see those gap between this red candle and this green candle. This is a weak opening. That's the reason why we see this gap. You understand? So that's also validates our distance. So we got that first break of structure here. So what I will be doing right now is to be placing my trade here and placing my take profit all the way up. So my trade is going to look something like this. I'm going to be placing my SL just beneath the swing low, because yeah, this is a lower time frame. If we got this trade from that 4 hour time frame, my SL would have just like this, but because we are on the lower time frame, we don't want to get wigged out. So I'm going to be placing my SL just beneath the swing low right here like this. You understand? To avoid any wig out, and my take profit is going all the way up this place. Now I do go for 1:3 most times, but for example's sake, for this class sake, I'm just going to leave it like this. Let me now run the trade through so you understand, so you do see how this market goes. So we got a tap in. We've been tapped in right here. Market tapped us in. The first tap was this place, so I'm just going to put it here like this. Market tapped us in from there. Let me just leave it like this. So you see, listen, had it been we put our SL this place, market would have wigged us out. You understand? So that's the reason why I put my SL just beneath this place. So as you can see, let's just see how this market runs after this. And yeah, it's still dancing, and boom, our take profit has been taken at this point here. Let me just arrange this. Pardon me. Our take profit has been hit at this point. Right now, at this point, you already understood what I'm explaining. If you don't understand, you can leave me a comment. That's no problem. So when you're looking for inducement, when you see multiple demand zones to buy from, always make sure to look for those strong demand zone that breaks into a new demand zone. And if you're unsure of that demand zone actually working out, you use this double confirmation that I just explained right now. If you didn't understand it, that's not a problem too. I will still make video in a clearer manner that will make you understand. So I just want to make a point that when you see things like this, always go for the strongest, and when you're unsure of the strongest, use a double confirmation. But I'm not a good explainer, I'm not a good teacher, I know, but I'm just doing my best so that you guys understood. So if you don't understand, it's not a big deal. Just tell me in the comment section and I will do better next time. So for this video, this will be the end of this video, and if you watch this video to this very end, I want you to leave a comment and say I must succeed is the next.